Look at this bloodbath. Prices nuked, people panicking, rage quitting crypto forever. But me? No, I haven't lost it. And no, I'm not laughing at anyone getting wrecked. I've just been here before, many times. And if history repeats, this is a gift most people won't recognize. Because volatility isn't your enemy, it's your biggest edge. By the end of this video, you won't just understand why crypto crashes happen, you'll see why they're the single best time to build wealth. If you're down bad, stick with me, I've got you. I'm Anna, ex-product manager, full-time crypto investor, creator of the Sovereign Stash strategy. If you want to build real wealth and freedom in the exponential economy, hit like and subscribe, and follow me on X, links in the description. This wasn't random, it never is. Market crashes aren't just meaningless chaos. Something shifts, sentiment flips, risk appetite dries up, market structure cracks, or hidden hands pull strings. And it triggers a cascade of liquidations. Weekends panic and bail, over-leveraged traders get torched, and what's left standing is a cleaned out foundation for the next shot at opportunity. Markets by their nature ride a boom-bust roller coaster. This is how markets reset. Every crash burns off excess leverage, which are those over-borrowed positions that pile up, and pops the bubbles of hyped, overpriced assets. It's brutal but effective. The reset hits market players right in the guts, rewiring their behavior through raw emotion. Fear replaces greed. Caution takes over. That shakeup is exactly what lays the groundwork for the next big phase of the cycle, clearing the deck for fresh moves. Volatility is often seen as a risk, but in crypto it's a feature, not a flaw. Many people assume that because crypto is volatile, it must not be a good investment. That logic is flawed. Unlike traditional markets, where slow and steady gains dominate, crypto is still a young and highly liquid sensitive market. Liquidity, essentially how money flows in and out of the market, has an outsized impact on price movement in crypto. This is why crypto doesn't quite behave like the stock market. When liquidity surges in, prices can skyrocket. When it dries up, corrections can be brutal. But here's the key. Without volatility, those life-changing gains wouldn't exist. If prices moved slowly and predictably, crypto wouldn't have outperformed every other asset class over the last decade. It's the same extreme price swings that can shake people out that also creates opportunities for those who understand why they happen, who stay in the market. And this is exactly why leaving crypto for good after a crash is one of the dumbest things. The real money isn't made by those who buy into hype at all-time highs, it's made by those who accumulate in the bear market. The ones who stalk the market like predators, waiting for the most deliciously low prices of quality crypto buried in the wasteland of neglected price charts. This is how cycles play out. The market punishes impatience and emotional reactions and rewards those who patiently stick around. Every time sentiment reaches extreme fear, the foundations for the next run are being built. But most people won't see it because they're too busy reacting emotionally. Now, if you're serious about making money in crypto, here's what you actually need to be watching next. Most people panic after a crypto crash because they don't know whether it's a buying opportunity or the start of a long downtrend. So how do you read the cycle? I've got a simple framework for you. If it was just over-leveraged traders getting liquidated, price usually rebounds fast. If macro conditions cause the drop, the downturn can last longer. Macro refers to the broader economic forces that impact all financial markets, including crypto. So things like interest rates, inflation, central bank policies, and global liquidity. So check out what the stock market is doing recently for clues. Number 2, is Bitcoin dominance rising or falling? Check out the Bitcoin dominance chart. If it's rising, it means Bitcoin is strong, and as such, altcoins are weak. If it's falling, that means risk on, the market is greedy, and capital is rotating into alts. So this chart can basically be a vibe check for whether fear or optimism is in the driver's seat. And number 3, where are we in the market cycle? The phase after a crash is accumulation, where smart money quietly buys while retail is fearful. Prices move sideways with low volatility. Momentum kicks in during the uptrend. Prices make higher highs and retail starts returning. Most people feel safe buying here, often too late. Okay, distribution is when large investors begin offloading their bags into strength. Prices chop, fake breakouts appear, and volume shifts down. Once liquidity dries up and distribution is complete, markets break down, causing cascading liquidations and panic selling. If you can recognize these phases, you're not just reacting like a deer in headlights, and you can think strategically. But accumulation and distribution can often look eerily similar on a Bitcoin chart, making it difficult to distinguish in real time. That is, until a breakout or breakdown confirms what was really happening. But even if you do identify a confirmed downtrend after a distribution, how will you know if it's a mini bear market, say a few months, like it was in the middle of 2021, or a brutal year-long slog that we got in 2022? Well, this is the game. Nobody knows, and so nobody can tell you. Not a one of your YouTube influencers. The pros are poring over data, charts, and their guts, but even they can't call it every time. And that's the beauty of it. This isn't a game just for the elites. The unpredictability levels the playing field, so you've got a shot too. So what does this mean? It's not about predicting the future with a crystal ball. It's about having a plan no matter what. You can play each phase if you can read it right, or better yet, build a strategy that works cycle-proof. Dollar cost averaging, DCA for example. It's boring but simple. It means you don't have to obsess over timing. It works if you want to get into the market, buying, and it works if you want to get out of the market, selling. Still, have a DCA strategy, Anna, isn't enough if you're new. I get it. Here's the real talk. You need rules. What do you do when prices tank? What do you do when they moon? What about when they're stuck sideways? Without a playbook, you're toast. Emotions will wreck you. I'll dive deeper into specific strategies in future videos because that's a whole beast on its own. I felt the sting of buying crashes too early. In May 2022, I jumped in during that dump, thinking it was a solid move. I had dry powder and deployed strategically, but I still put in more than I wish I had, because when June 22 rolled around and the market tanked even harder, oof, and then November hit and it went down further. I wasn't wiped out, but I kicked myself for not holding more back. I've learned that every asset finds its bottom on its own schedule. Some hit their floor in June that year, others not until December, and they didn't all sync up with Bitcoin's low either. It taught me this. You can't time it perfectly, and definitely not on all assets. But if you're too scared to buy when fear's peaking, you're probably missing the juiciest opportunities. My biggest crypto wins didn't come from buying hype at all-time highs. They came from exactly times like this, when the market was bleeding, when everyone was quitting, when it felt like the worst idea ever to stay in crypto. When FTX collapsed in November 2022, Sam Bankman-Fried took a bunch of projects down with him, including Solana. The market didn't just drop, it nuked. Sentiment on Solana turned radioactive. People were saying it was dead, that it was tainted forever. But once I got over the initial shock and actually sat down to think through Solana's fundamentals, I realized something. Sam Bankman-Fried was not Solana. The chain was still running. The devs were still shipping. The tech hadn't changed. So I started slowly buying. And the more data I gathered about developer activity, the more I felt reassured. Even better, I realized the devs will have a chip on their shoulder to rise from the ashes and prove the market wrong. And I love to back teams like that. My average buy order for Solana ended up being around $18. I was buying slowly and steadily when most people wanted nothing to do with it and believed all the FUD around the chain because they didn't scratch deep enough beyond superficial Twitter stories. This is what I mean when I say volatility is your edge. It's scary in the moment when you're going against the crowd. But if you think it through rationally instead of emotionally, you'll find yourself getting in when the real money is made. Let's wrap this up. Crypto volatility isn't the problem. It's the opportunity. The winners aren't the ones dodging it. They're the ones who get it and use it. Every crash is a chance to buy low. Every shakeout clears the deck for the next rocket ride. I've stuck through every crash because crypto's my shot at real freedom. Not just money, but control over my assets too. That's what keeps me smiling when the market's screaming. Now you get it. Crashes aren't something to fear. They're the single biggest wealth-building moments in crypto. Most people miss them, but now you won't. Every bit of knowledge you pick up about cycles, liquidity, macro forces is a weapon. Knowledge is power. Strategy is king and beats panic every time. The market doesn't care about your feelings. It rewards those who stay in the game. While the masses panic, the smart ones are building their buy list, stacking their future. This $3 trillion market isn't stopping here. It's on its way to 30 trillion and beyond. The only question is, will you still be here when it happens? If this flipped a switch for you, check out my video, Crypto Wrecked You, How to Rebuild Your Crypto Portfolio. It's a nice follow-up. And let me know your crypto crash stories. Did you buy Solana like a hero in November 2022? Or did you scoop up another wrecked asset and hold it to glory? Let me know in the comments. Remember, volatility is only scary if you don't see it for what it is, a gift.